Thank you, Professor Buch. A lot of food for thought and the possibility of a double dividend. What else could you ask for? Ladies and gentlemen, it's time to say farewell, and who would be better suited to do that than the Deputy Prime Minister of the State of Hesse and the Minister of Economics, Mr. Tarek Al-Wazir. Warm welcome.
Thank you. Ladies and gentlemen, I'm aware of the fact that you stayed here for the whole day, and that outside is the first day that is called spring. So I'll try to be as short as possible. First of all, it's a pleasure for me to have the opportunity to speak here, and it's also a pleasure for me to speak here because for the government of the state of Hessen, it's a goal to develop Frankfurt as a regulatory hub, a place where the future of financial markets regulation is thought about, is decided, is developed, and also executed. Therefore, conferences like today's are an important part of our role as a regulatory and as an academic hub for financial markets. I'm sure that today several highly compelling keynote speeches and panel discussions have highlighted issues of the overall theme of the conference. And the question how to foster growth in the new regulatory landscape, in my view, is not as contrary and contradicting as it sounds. I think growth and regulation are no conflicting principles. I think they're two sides of one coin. Because hardly anything affected, at least my thinking about economic policy and markets as much as the financial crisis did. And in many aspects, this crisis was and still is one of the most expensive economic crises the world has ever seen. So 2008 and 2009, we barely scraped past the complete collapse of the world's financial system. And governments all over the world had to pump huge amounts of capital into the financial sector. And regarding their economic strength and development, affected economies were set back by years. So this is a sad evidence of the possible negative impacts of insufficient regulation, or an alternative view on the relationship between regulation and growth. I'm sure that we all agree that the financial crisis like the one we saw in 2008 has to be avoided in the future. And the broad set of regulatory measures which were introduced and are being introduced during the last years made the financial system more resilient than 6 years ago. Nonetheless, we are still not sure if we are where we should be. So I think that policy must continue to close still existing loopholes and make financial market regulation more effective. And that doesn't mean that regulation must become more complicated. Of course, regulation should always be subject to necessity and, of course, be reasonable. Moreover, in our role as a state government, we have a special responsibility to assure regulation and growth being in line. Particularly effects on the so-called real economy need to be taken into account. And I think the good news is, from my point of view, there are a number of measures that meet this requirement and thus could be introduced in the near future that are easy to establish and effective. Let us take, for instance, the discussion on the leverage ratio. Only well-capitalized banks can ensure sustainable growth in the long run. And in the long run, more equity capital is not overly costly for banks. On the other hand, banks are understandably very concerned about the short-term commercial costs coming along with higher equity. I'm sure you could solve this by introducing a leverage ratio over a sufficiently long phase-in period. At the end of the day, there are economic benefits that potentially outperform the commercial costs by preventing us from a future financial crisis. Ladies and gentlemen, the Financial Center Frankfurt is by far the most important and largest financial center in Germany. And in recent years, the region has furthermore become one of the world's most important regulatory and supervisory centers. The opening of the new premises of the European Central Bank that will take place tomorrow is a strong sign of confidence in Frankfurt and a commitment for the regulatory hub, Frankfurt. Apart from its importance to the German and European economy, Frankfurt's financial service sector is of considerable economic significance for the region Rhine-Main. More than 64,000 people are directly employed by the over 190 banks that maintain headquarters in Frankfurt, of which over 3/4 are foreign institutions. And the large number of related jobs, for example, service providers or affiliated education and research, is not even included. We are aware of that. We are aware of the importance of this economic sector for our region. And I hope and I'm sure that the Finance Summit helps us to communicate the strengths and special characteristics of our financial center far beyond the borders of our state and Germany. I'd like to thank the organizers for the efforts, and I'm looking forward to next year's Frankfurt Finance Summers. Enjoy the last glimpses of sun outside. Enjoy the first day of spring, and I hope to see you again next year. Thank you.